5 seconds to the open. Ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
Alrighty, friends, and welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to have you along for the ride. My name is Jerry Robinson. I'm an economist and the founder here at followthemoney.com. We have been around since 2010, helping individuals just like you make sense of this economy, all along explaining that this is a big house of cards. My book, Bankruptcy of Our Nation, if you've read that, you know that it's filled with lots of information that we just don't hear a lot about in the mainstream press. Some of the things that undergird our system, like fiat money and the petrodollar system, these are things that are insidious problems for the United States, but they never really have been dealt with, and we're going to have to deal with them eventually. In fact, the day of reckoning is certainly coming. And take a look at the stock market here where we are today. As I record this podcast, it is Wednesday morning, the 11th of March, and I'm staring at my screen here, and I see the Dow Jones is down nearly 1,000 points, almost another 4% today. The NASDAQ down about 3%, and the S&P 500 down at about 3.5%, holding just above about that 2750 level, which we've been telling our students about. You know, it's really a key area, 2750 on the S&P 500. We're watching that pretty closely. So it's been a wild couple of weeks. And from our last podcast, we talked about how volatility had struck in 2020. This is a big surge in volatility, such that we haven't seen since the 2008 crash. And there's been these rumors for so many years that we're on the cusp of another 2008 crash. And people have often thought, well, it will be this. And remember living all throughout the Obama administration, we were constantly told that Obama was going to destroy the economy, that the stock market was going to crater and all of this. But the stock market just kept chugging higher as the Federal Reserve kept pouring more and more money, more liquidity into the system. Well, here we are today with the Federal Reserve with rates sitting at 1%, and yields have collapsed across the board, meaning that the Fed, on top of its recent emergency 50 basis point rate cut that it launched last week, we are now, of course, we have the March 18th FOMC meeting, very likely to get another rate cut there. So we're dealing with, an economy here that is on the brink, and we have literally 1% of interest rates before we move into negative territory. So this is astonishing. During this entire bull run, for the most part, especially over the last, let's just say for the last, year or so, this raging bull market in stocks, the Fed has been cutting rates to keep it going. Okay, this is beyond inane. It's beyond anything that I've ever seen. When you have a stock market that is rising and an economy that is the greatest economy ever, as we've been told from Washington, then that's a time when you raise interest rates, right? To slow down the froth. You don't cut rates to keep it moving even higher and accelerate the rise, which is obviously going to lead to an eventual correction. And here we are now with the coronavirus raging. Fear, uncertainty, and doubt all around the United States and abroad over the ultimate economic impact of this novel virus. In fact, it's just been pretty mind-blowing to watch the stock market fall with such great speed. In fact, I'm looking here at a chart of the S&P 500, seeing that it had reached up to that level of about 3,400 just toward the middle, actually toward the end of February. And then that 3,400 level was finally just lost, and we fell off of a cliff in price, falling to 3,300, 3,200, 3,100, down below 3,000. 3,000 is a key area, by the way, a psychological area that will now serve as resistance for this market on the S&P 500. We're down now around, as I mentioned, around 2780, just above the 2750 area. That's a key area, key zone, key support zone, and we'll see if it can hold as we head into the coming days and weeks. Now, based on everything we've seen from Washington about the coronavirus, this deadly virus that in many ways we just don't know a whole lot about, it does seem, if you look at the actual official numbers, that the fatality rate is somewhere between 1% and maybe on the high end 5%. I'm sure it's somewhere in between those numbers. But when you look at that and you think about some of the unhealthy people here in the United States, I mean, you've seen that South Korea and Japan have dealt fairly well with this, but the United States, we're a special kind of people. We take lots of pharmaceutical drugs, more than almost anybody in the world. We're especially unhealthy, right? And so when you have a kind of virus like this that sweeps through America, it's a little more concerning, and we just don't know where all of this is ultimately heading. And that explains why the stock market just can't make up its mind. That's why the stock market continues to sell off, because it's called price discovery. Investors are trying to figure out what the damage is ultimately going to be to these quarterly earnings from many of these companies. There's just no way to know right now. And in fact, from some of the companies that have kind of hinted or given guidance, it doesn't look too pretty. And so it should not be a surprise whatsoever that Washington is already lining up to offer out free money to business and probably even to you in the middle of this threat. So in addition to the Federal Reserve stimulus, right, we've seen an emergency rate cut there. We're probably going to get another one March 18th. What else is coming? Well, Trump is going to issue some bailouts. I mean, this is an election year. And the last thing that President Trump wants is for the economy to sag right into the elections, right? And so President Trump is very likely going to be providing some payroll tax holiday. That's at least what he wants to do. We'll see if that gets passed through the House and, of course, the Senate. But the payroll tax holiday that he has proposed goes until the end of the year. Now, what's so interesting about the payroll tax holiday that the Trump administration is bantering about, that's where the government derives a tremendous amount of its revenue every single year. Now, if you've been listening to this podcast for any amount of time, or you're familiar with our message here at Follow the Money, read our book, Bankruptcy of Our Nation, I mean, you know that America has been spending money like a drunken sailor, right? It consistently is running $1 trillion deficits each and every year. The President Trump is, running $1 trillion deficit now. If he suspends payroll taxes, in order to fight the economic effects of coronavirus, we're talking about a lot of money. And in fact, whenever Mr. Kudlow, who is the economic advisor and economic chief for the Trump White House, when he was asked about this payroll tax cut and this tax holiday, the answer that this reporter received about how we were going to fund this was fairly interesting. Let's listen to the question that the reporter throws out to Mr. Kudlow, and let's hear the response. Roll the tape.
In 2018, according to the Center for Budget and Policy Priorities, federal payroll taxes generated $1.17 trillion, which is an enormous figure. Larry, you're suggesting that you can make that up from general revenue. Where are you going to get $1 trillion from?
Stop. Okay, stop the tape. First of all, note the irony here, that it has been, of course, largely the Trump administration who has been looking at the Democratic Party saying, how are they going to pay for all of these things that they want to provide to the American people? Now the table is turned. In fact, President Trump has been spending $1 trillion more each year, despite this greatest economy ever. He's been spending $1 trillion more each year than he has, right? That he has in receipts. So the government is taking in $1 trillion less than it's spending each and every year. So this reporter rightfully asks, where are you going to get $1 trillion to pay for this tax holiday, the payroll tax holiday? Where's the money going to come from, right? It's a valid question. So if Bernie Sanders has to answer the question, and if Joe Biden has to answer the question, and if everybody else has to answer the question, why shouldn't the president have to answer the question? How will you pay for this $1 trillion payroll tax holiday? And here's the answer. Roll the tape.
Let us put the proposal out in concrete details and flesh that out, and we'll have much better answers. Right now, I want to stay in my lane, and I think the health story, the coronavirus story, is very, very important here. We will do the best we can, Eamon, to give you specific plans and details once we flesh them out.
Oh, sure. Oh, sure. So basically, they have no idea how they're planning on paying for this. They simply just want to cut payroll taxes for how long? Well, according to the latest report, until the end of the year, or if you can do the math, it's called until Election Day. Wow. So on top of a payroll tax cut, a temporary payroll tax cut, which the White House has no way to pay for, has no idea how it will pay for it. So that means that we will have a $2 trillion deficit in 2021, the fiscal year. That is simply incredible, right? We've never seen anything like this. So not only is this nation bankrupt in the fact that it cannot pay for its annual expenses every year, it has to borrow from China, right? Simply to offer the corporate welfare programs that it offers each and every year for corporations and all of this other stuff. But on top of that, they don't even have a plan to pay for their existing tax cut that they want to offer now in an emergency. So the interest rates are already near zero, right? So there's not much wiggle room there. The Fed doesn't have much room. That's monetary policy. Then fiscal policy, we have the White House offering money that it doesn't have, right? And they don't know where they're going to get the money from. They don't have those details yet. We'll nail down those concrete details of like where the money is going to come from later. Now, that's how Washington typically operates. In addition to that, the Trump administration is also bantering about issuing some executive orders. One of these could be providing extended employee sick pay and also tax deferrals for select industries. So we're talking about bailouts for several different industries. The cruise line industry, which has been horrifically hurt by this. As you can imagine, who wants to go on a cruise in this kind of environment after some of the stories we've seen? Also, airlines have also been hit very hard. And so airlines and also hotels, right? Hotels and just the whole hospitality industry is also suffering right now, and it could get worse. And so there's talk about even providing some relief for hotels. And by the way, President Trump owns a few Trump hotels, doesn't he? So I'm sure that'll help his business as well. So we have these types of bailouts being offered by the government. And if you look at Wall Street right now, it's still not convinced that this is going to be enough. So how much lower can this stock market go, right? How much lower will we go? Is this the bottom? Is the bottom in? And is now the time where we're going to begin to see the market begin to rally on the hopes of a bailout? Or is the worst still yet to come? And are we to be buckled in and ready for even more volatility ahead? Well, no one knows the answer. You'd have to have a crystal ball to know where things are going to go from here. But things certainly don't look good. I'll certainly say that. Things do not look good for this current situation. By the way, on today's podcast, I'm going to be joined by Professor Richard Wolff. He is the Emeritus Professor of Economics at the University of Massachusetts in Amherst. And he's been dubbed by the New York Times as probably America's most prominent Marxist economist. He has a brand new book called Understanding Marxism. And I want to talk with Professor Wolff about the topic of Marxism, about the topic of Karl Marx, because we are hearing a lot about socialism versus communism, not as much now that Senator Bernie Sanders really seems to be fading into the background with former Vice President Joe Biden really taking the lead in the Democratic ticket as we head into the 2020 election. But nonetheless, we're probably going to continue to hear about the threat of socialism versus capitalism, right? So free market capitalism versus socialism. And so we'll talk with Professor Richard Wolff here in our next segment about his latest book and also talk about what's been happening in the market. I'd like to get his insights as an economist, see what he is thinking about. So in addition to all the things we've talked about, we also have another story that broke last week, and it was actually on Sunday, where we learned that OPEC, and particularly the Saudis, drastically cut their official selling price of crude oil by several dollars, sparking what the media has called a price war between Saudi Arabia and Russia. Well, if you dig deeper, you, of course, and if you even know too much about the energy industry or the global energy industry, you know who the number one leader of oil production is in the world today, right? It's not Saudi Arabia. It's not Russia. It's the United States. Through the innovative form of fracking technology that we have here in the United States has parlayed itself into the number one producer of oil. And as such, whenever the Saudis decided to cut the official selling price of oil, thus sparking a quote-unquote price war with Russia, according to the media, you have to think to yourself, that actually hits who? It hits the United States pretty hard, doesn't it? And of course, the media has been very careful. No, the Saudis aren't coming after the U.S. No, that's not what's happening. It's all Russia. Yeah, but the United States is the number one oil producing nation right now. So if you're cutting oil prices and you're forcing a price down, then you're obviously attacking the leading producer of oil, aren't you? Yes, of course. So the Saudis were not just targeting Russia with this price cut. They're also targeting U.S. oil producers, right? There's no doubt about it. Now, the media doesn't want to say that or whatever because Saudi Arabia is our buddy. They're our best friend forever in the Middle East, whatever that means. But the media is not going there. The media is keeping this all about Saudi and Russia. Well, let's think about why the Saudis might be interested in cutting oil prices and really kind of landing a blow on the U.S., especially in the oil and gas space against the U.S. Why would they be interested in that? Well, remember the Saudis, through the petrodollar system, buy lots of bonds. Do you think they're enjoying those 0.4% or 1% yields that they're getting right now from these new bonds that are rolling out? How does that feel, right? Whenever you're stuffing all your money in U.S. government securities and you see the government's policy of driving interest rates down, how does that make you feel, right? Or we have another headline also that came out on Tuesday, and that was that the president of the United States here, President Trump, had determined that Iran, who they've been beating their chest about for years, right? Over there surrounding Iran. Iran's a threat. They want to hurt your family, blah, blah, blah. Of course, hasn't gone to war with the United States. We funded a war against Iran, helping Iraq and Iran back in the 1980s, thanks to the Reagan administration and all of that. But aside from that, now the Trump administration has decided that the Iranian regime no longer poses an immediate threat to the United States. And so therefore, we're receiving word that the United States is pulling out of those areas. And you also have to think to yourself, the timing of this. This certainly cannot be a favored policy by the Saudi king, right? The Saudis want the United States military to serve at their beck and call, the way that President Trump has already said that Saudi Arabia pays cash for our military, and therefore, because they pay cash, we serve as their bodyguard. Let me scratch that. Your sons and daughters serve as Saudi Arabia's bodyguard. And as such, the U.S. has been willing to go fight Saudi Arabia's wars in the Middle East. And now suddenly, after literally 48 hours after the Saudi Arabians announced that they were slashing their official selling price of oil, which was a big blow to U.S. oil producers, the Trump administration has now said that Iran's no longer an immediate threat. Very interesting stuff if you follow the petrodollar system, if you follow this insidious relationship between the United States and Saudi Arabia. So in the middle of all of this, with the coronavirus spreading around the world, creating fear and havoc, creating uncertainty and doubt, you also have a potential breakdown of U.S. and Saudi relations. Who knows what's really going on here? But if you read between the lines, kind of read the tea leaves here, you see something's up. So oil prices really hurting the overall, falling right now. It's good for some businesses, really bad for others. We see the White House preparing to unleash a tremendous amount of bailouts with the taxpayer money, while they're simultaneously telling us that socialism is the greatest threat to the United States economy, right? As they offer corporate bailouts and offer to mail you a check, right? Even, or give you a payroll tax cut with money that they don't have, right? How is this not socialism? How can we, with a straight face, look at our current economic system that relies upon all kinds of bailouts constantly and not see the irony of warning people about socialism? I mean, socialism is, as we did a show on this topic. In fact, American Socialism 101. If you haven't heard that, go back and listen to that podcast. Probably just a few weeks ago, maybe a couple months ago. And it was, it was an expose of this same topic. Well, anyway, to move forward with this topic, I have brought on a returning guest today for today's podcast. And his name, as I mentioned earlier, is Professor Richard Wolff. He's written a new book called Understanding Marxism. And before I bring him on, I just want to make this comment that many people get absolutely terrified of the idea of Marxism. When they hear Marxism, they think of Soviet Union, they think of various communistic authoritarian regimes that have existed throughout time, especially in the 20th century. And obviously, this creates a lot of angst. Well, Karl Marx was perhaps one of the most misunderstood men, I think, of the 19th century. And in his book, Understanding Marxism, Professor Wolff really peels back the layers and really shows what Marx's goal really was. It's very interesting from a man who has studied Karl Marx for much of his adult life. And by the way, Professor Richard Wolff, which we won't get into in the interview, has a bachelor's of history from Harvard. He has a master's of economics from Stanford. He has a master's in history from Yale, and he has a PhD in economics from Yale. So, the gentleman knows a little bit about Marxism and capitalism. So, in all of the noisy debate surrounding this topic, let's move into our interview with Professor Richard Wolff on the other side of this break. Hold tight. Well, friends, we have a very special giveaway before we continue on with our show. This month on Twitter, our Twitter page, twitter.com/FTM Daily, we announced a monthly giveaway. This month we are giving away 1 ounce of silver in the form of a silver eagle coin, a beautiful silver eagle coin. And all you had to do to enter the contest was retweet and like our contest tweet over on Twitter. And the winner is Stephen Kaiser. I want to give a big hand to Stephen Kaiser and congratulations. He is a member here at Follow the Money, and he retweeted and liked that post, and he was chosen at random. Congratulations, Stephen, and stay tuned to our Twitter feed, Follow the Money Twitter feed, for our next giveaway. If you're not already on our Twitter feed, go there and follow us and stay connected for our next monthly giveaway. Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812. All right, well, joining me on the line today is a returning guest. He is a very well-known economist, professor, and author. His name is Richard Wolff. Grateful to be joined by Professor Wolff today. He is the Emeritus Professor of Economics at the University of Massachusetts Amherst and visiting professor at New School University. His latest book is entitled Understanding Marxism. I want to talk to Professor Wolff today about his new book, but before we get into that, Professor, we have seen quite an interesting 2020 election playing out before our eyes, and what an interesting horse race this has been. Earlier in the year, we began to sense, or maybe in just a couple of months ago, we began to sense that Bernie Sanders, the Democratic socialist running on the Democratic ticket, had really kind of moved ahead. And then suddenly at the very last minute, we saw that typical Democratic National Committee kind of consolidation, and what a stunning coup they pulled on Sanders. Do you view it as a coup as well, or do you think this was just in the cards?
Well, I guess I'm a little bit of both. Let me explain. Sanders has already achieved an unbelievable and unexpected victory, no matter what happens. And let me explain what that means. Basically, since the late 1940s, so we're talking about something that's almost 70 years old, it has been and it was a complete taboo in the United States in a way that did not exist in most other countries of the world. A taboo against socialism, communism, Marxism, any of those things. It was as if a politician who took that label committing political suicide by doing so. It was just out of the pale. You couldn't be in the slightest way sympathetic, etc., etc. And that was the rule for Republicans and Democrats alike. What Sanders has done, first in his race in 2016 and now in the current race in 2020, is basically break the taboo. That's a historic event. He has shown the American people that millions upon millions of their fellow citizens, east, west, north, and south, are perfectly comfortable with voting for a socialist. They're not put off by it. They're not terrified by it. They're not scared of it. They find it interesting, and when they compare the socialist Sanders positions and programs to those of his opponents, they vote for him. And if you look at people who are young, you'll see that he still continues to command majorities pretty much everywhere. So it is a remarkable achievement, and nothing that happens to him here on out is going to diminish that really in any way. It was necessary, as you quite rightly put it, for the Democratic National Committee, which is the old, established Clinton, Obama, all of that. It was necessary for them to basically extinguish all of the other candidates and force them, or persuade them, if you like, to fall in behind Biden, to even prevent Sanders from actually winning the nomination by the sheer victory number of his votes. And that's also testimony to the enormous strength that a socialist has been able to demonstrate. This will go on and shape American politics long after Bernie Sanders is gone. And so it has to be emphasized as historic. I do think you're right that the establishment is terrified of all of this, and so pulled out every stop. It was, for example, stunning to see Kamala Harris, who had excoriated Joe Biden during the debates, suddenly turn around and literally talk about him as if he were the greatest gift to African Americans one could imagine. It was a spectacle of the least attractive part of our politics, if ever you wanted to see it. As I say, yes, I think the Michigan results particularly are damaging for him to win right majority. But in a sense, his historic place in American political life, he's established that, and we will all be shaped in the future by what he's accomplished.
You're listening to the voice of Professor Richard Wolff. He is the author of a new book entitled Understanding Marxism. He's also an economist and a professor of economics at the University of Massachusetts Amherst. So, Professor, as we move into 2020, we've seen this sudden spike of volatility, largely due to the coronavirus, this novel virus that's spreading around the world. And we've seen up until now, bouts of volatility in the market since the 2008 crash have been fairly manageable. The Fed has been able to step in, calm the markets. Usually it's been monetary stimulus, not fiscal stimulus, that has done the job. Now we've entered into 2020, and for the first time, we're seeing the volatility reach those 2008 levels. We're seeing the stock market really crater, a lot of fear, uncertainty, and doubt generated around the coronavirus. And as an economist, you've lived through these moments. You've seen the 2008 bubble, as I have, and the crash, the 2000 crash. What's your take on the coronavirus and the current state of the stock market? How do you view this in context?
Well, I'm really glad you asked the question, Jerry, because history is the best guide we have. It's not perfect. We can't extrapolate simply. But in the end, knowing what's happened in the past is the best clue we have to make sense of the present. So here we go. Capitalism as a system, from its beginnings 300 years ago in England to becoming the global system that it is today, wherever it has become the system, we have the following story that economic history teaches us. On average, every 4 to 7 years, capitalism downturns. Sometimes they're short and shallow, sometimes they're long, deep. But we have them on average every 4 to 7 years. It's an average, so sometimes it can happen quicker, sometimes it takes longer. The one we're in right now is unusually long. That is, the last real big downturn we had was 2008 and 9, and so here we are 10, 11 years later. That's a real outlying observation, but the law of averages is the law of averages, and so for most of us watching, we saw a capitalism, both here in the United States and global, that was, if you allow me the expression, overdue, historically speaking, for another downturn. And the history of capitalist downturns is that almost anything can set it off. We had the tulip mania back in the early days, where something in a market for flowers was powerful enough to send it off. It's never the straw that breaks the camel's back. That's why we use that phrase. It's all the other things that are encumbering that camel's poor back. For me, the coronavirus, which is a scary phenomenon, no doubt, is in the nature of this kind of event that in other circumstances, even think about the SARS epidemic a while back, Ebola, we've had the system affected by scary viruses, and we've been able to get through it, much as we've been able to get through some of the downturns since 2008. But that is the history of capitalism. It gets through some of them, but then the pressures of the basic instability of the system catch up with it, and that's what we're seeing now with the terrified, these headlines, whether it's Merkel in Germany, desperate for what's going on in that country, or here, the kind of out-of-control spectacle of our leaders in Washington that can't even decide if it's a serious issue, nor what to do about it, nor how quickly. This is chaotic. For anyone who isn't, mesmerized by public relations, it seems to me we are facing what is likely going to be a serious economic downturn, where the coronavirus is the thing that sets it off. But if you look at the collapse of oil prices, that by itself could have done the job on its own. Oil in this country now is at a price where all the fracking in the Midwest of the United States is now unprofitable. All of that fracking is paid for by money that was borrowed from all of the biggest banks in the country. That money cannot be paid back if the price of oil stays at the price it is today. That means those banks are insolvent. They're going to have to go to the government for a bailout. The American people are not happy about the bailout back in 2008. It is not going to be easy to get them to pay for yet another one. We're looking at a cascade of problems. Those are never the cause of one thing like a virus. Those are the accumulation of the kinds of imbalances that capitalism generally produces. And by the way, the best sign of it, if you like, the best symbol of the imbalance, the inequality in the United States. And to have Jeffrey Bezos to spend $125 billion when the Federal Reserve survey indicates that more than half of American families could not meet an unexpected expense of $1,000, that's an economic system waiting for a crisis, no matter what sets it off.
And that's exactly what you wrote about in your book, Understanding Marxism, which, again, I had a chance to read last week. We were talking about off the air, and I was really impressed with the way you laid out Marx for the average American reader, which I assume was your intended audience, but just the average layman who doesn't really understand capitalism, let alone Marxism itself, or even Karl Marx. And as I was reading through the book, one of the things you said actually early on page 3, which I found very interesting, and I think maybe you could elaborate on this. You called Marxism the critical shadow of capitalism. I think that sentence really is pregnant with a lot of understanding in it. Can you explain what you mean by Marxism being the critical shadow of capitalism, as opposed to being some monolithic structure of its own?
Right. The way to preface it is to say Marxism has been used and it has been abused. And you can't judge it only by the abuse. every great series of ideas, mathematics, Christianity, you name it, has its users whom we celebrate and its abusers whom we criticize. Marxism is no different. Here's what I meant. Capitalism, like the systems that preceded it, slavery, feudalism, tribal economics, small self-employed farmer economics, you name it, every one of those systems had the people who celebrated and loved it and the people who were critical of it. And they debated and they argued. And in the end, those systems were passed. That is, they were superseded. We put aside slavery after centuries of experiments with it and debates over it. We did the same with feudalism. There is no reason to be afraid of or to be worried if capitalism displays the same debate between those who love it and those who criticize it. That's how systems identify their problems. That's how systems improve. We're proud in America that we criticize our education system and our road system and all the rest. Criticize our economic system. Otherwise, it rots from the abuse of pretending that there is no criticism. And all Marxism is the most developed, sophisticated accumulation of criticisms that we have. To study Marxism, which I've done, is not necessarily to become anti-capitalist. You may not, but you will learn the way you always learn from criticism. Let me give you a simple example to end this. If you knew about a family up the street, and you knew that they had a mama and a papa and 2 kids, and you wanted to understand that family, would you go up and talk to only one kid, the one who loves the family, but not talk to the other kid, the one who has criticism? I think most rational people would say, no, you to both of them, and then you draw whatever conclusions you think are reasonable from the 2 perspectives. We have in America loads of people who love capitalism, and that's fine. But we also have lots of people who are critical, and Marxism is the most developed literature of criticism we have, both of experiments to go beyond it, but also of criticisms of people who live in capitalism. It is the product of capitalism. I laugh sometimes when people say, well, capitalism won and social Marxism lost. That's a mistake, because if capitalism won, nothing more guarantees the future of Marxism, the critique of that capitalism, than the persistence of the system itself, because it is the shadow, it is the child, if you like, of capitalism. And I think we would be a healthier and better off society, capitalist for a while, if we understood and took seriously the criticisms of Marxism, rather than pretending we don't need to think about them or understand them or see them.
That's such a great point. And it seems like things like capitalism almost become deified, and they become untouchable in the fact that you cannot criticize. And Marx does the unthinkable. He criticizes the deified idea or concept or construct of capitalism, but he was not a critic of democracy. He was not a critic of many of the other fraternity and equality. He was very much, from what I read in your book, he felt betrayed by capitalism because he felt like it didn't produce what it promised. It didn't really spread the wealth as he had perhaps believed that it might.
He was a child of the French Revolution and the American Revolution. He loved those things. He thought that democracy, equality, liberty, fraternity, the slogans of the French and American revolutions were exactly what the world needed. And he was like everybody else of his generation, caught up in those momentous changes at the end of the 18th century. For him, capitalism promised, when it displaced feudalism, when we no longer had the lord and the serf, but we replaced that with the employer and the employee, the typical arrangement in capitalism, that would bring, which what those revolutionaries from Thomas Jefferson to Robespierre had promised, that would bring a new world, that capitalism would bring liberty, equality, fraternity, and democracy. And when it didn't happen in the middle of the 19th century, when Marx became an adult that could look around, when it didn't happen, he drew the conclusion that capitalism had promised to bring those wonderful things, but had failed to deliver on that promise. And his criticism of capitalism begins at that point. That's its objective. How do we get the liberty, equality, democracy promised by the advocates of capitalism, but that they failed to deliver. And his interest in going beyond capitalism was to get to a place to set up an economic system that had a better chance of realizing liberty, equality, fraternity, and democracy than capitalism had shown itself able to do. And today in America, looking at the levels of inequality we have, you kind of have to take your hat off that Mr. Marx had something to contribute.
I was reading a book recently, Professor. It was entitled The Unintended Reformation. It's an older book, and it talks about how religious revolution or the Reformation led to a secularization of society. And whenever I think about Karl Marx, I kind of see him in some way in a similar vein to Martin Luther. Martin Luther launched an unintended reformation. I'm convinced if Martin Luther could see the current fractured state of Protestantism, he would disown much of it. In fact, if you walk into a Lutheran church, it feels and looks very similar to a Roman Catholic church and a mass. But the disciples of Luther and of Calvin, for that matter, often took the thoughts and ideas and writings of these reformers and they extended them, oftentimes in ways that were unintended by Luther or by Calvin. And so I see the plight of Karl Marx, and maybe I'm wrong about this, maybe you can help me, but I see the plight of Karl Marx in a similar vein, that perhaps much of what has perpetuated in his name may not represent what his goal was. And as a longtime student of Karl Marx, would you say that his writings should be blamed for all of the horrors of the authoritarian communistic regimes that rose up in his name? Or is this maybe a case of unintended consequences?
Well, I couldn't agree more. I think it's a case of unintended consequences. I think you see that everywhere. I think that many of the great thinkers of the history of the human race would be aghast at what some people, not all, have made of their writings. You know, there's a famous story of Karl Marx, who in his lifetime went to a meeting late in his life when his writings were known, and listened to a young Marxist explain, and at the end of the meeting he turned to the young man and said, "If that's Marxism, I'm no Marxist." That's how distressed he was, even in his own lifetime, with what some people did. I mean, yes, I think that in the Soviet Union and in other parts of the world, politicians used the notion of a revolution against capitalism, of doing something that was less unequal, doing something that was less unstable, doing something that was more beneficial to the mass of working people, was a clever device. It was something to say you believed, even if your objectives were actually quite different, in just the way that dictators around the world today, from Saudi Arabia to Brazil, refer to themselves as quote-unquote Democrats. When we look at what they do, they're the furthest thing from it. But there's no place that gives out a certificate allowing you to use a word. You wake up one morning, call yourself a Democrat, doesn't mean you are one. Just the same, you wake up one morning, call yourself a Marxist, doesn't mean you are one. There are always different interpretations, and I think it's necessary to be critical of those interpretations of Marxism that you don't like. There are plenty of those that I don't like, but there are others that I find deeply insightful, and you wouldn't want to throw out the benefits of looking at what makes sense because you are critical of other interpretations, and that's exactly why your metaphor of Christianity or Catholicism or Lutheranism, they have exactly the same problems, and they should be aware that logic that it requires you to distinguish among the interpretations of a body of thought, that has to extend to socialism, communism, Marxism, on the same grounds.
People seem to be terrified, literally terrified, by the idea of Marx's criticisms augmenting capitalism or in some way changing the current setup. And we see that especially how the GOP was preparing and maybe still are going to run with this capitalism versus socialism debate, which is really quite fraudulent because, as you've pointed out, and as many others have pointed out, if you drive on a highway, or if you go to a public park, or if you take a Social Security check, or if you accept a bailout from your federal government, in many ways, you're participating in a Marxist world, right? And so it's strange how they have created this dichotomy of capitalism on the one hand, or socialism on the other, and there's no way the two can touch. There's no way that the two, but in reality, we have a mixed economy here. So there's really quite a bit of misunderstanding, and I think your book perhaps can really help people along those lines. Do you find the recent bailouts being bantered about by the White House just kind of comical, considering they're so strongly against socialism?
Absolutely. I find it hypocritical in the extreme. Every time, and you saw it really dramatically in 2008 and 9, when the private capitalist sector hit a bump, had a real problem, the very people who had been giving a speech the week earlier about how the government is a mess up and the government is a burden on the backs of our big businesses, they all got in their private jets, flew to Washington, got down on their knees, and begged the government to save them, which it did. Everything from General Motors to all the big banks in New York, there they were, groveling before the very earlier said was the economic mess. Now it became suddenly the economic savior. But I think that the demonization of Marxism and socialism has a simple explanation. It's the fear of the private enterprise systems leaders that they won't be the leaders in some future, that their own system has so alienated the mass of people that they are, as Americans now are, in millions, voting for a socialist. The handwriting is a little bit on the wall, and that's what happened in the 1930s, and that's why at the end of World War II, there was this massive attack on everything socialist and leftist, because they were horrified that during the Great Depression, the government created Social Security and unemployment compensation and a minimum wage, and all those things that helped the mass of people that private capitalism had not achieved in the prior century, and to demonize socialism was the answer. And I'm, for one, very appreciative that the demonization is now over, and that's why Bernie is an important historical figure in American history, because his initiative, following on the Occupy Wall Street movement, really broke that taboo that we began this conversation with.
Very interesting stuff. We've been listening to the voice of Professor Richard Wolff. He is the author of a new book called Understanding Marxism. He's been labeled by the New York Times as probably America's most prominent Marxist economist. So therefore, this makes it a very obvious book for you to write, Professor. I really appreciate you taking time to join us on Follow the Money Radio. And in our final moments, I know your own work has really focused a lot on taking the concept of socialism in this direction of democracy at work. And I find that concept to be so interesting as we bring this to a close, because that promise of democracy that was written into the founding documents never quite made it to the workplace. So we have self-rule at the government level. We're the little kings, and we get to vote for whoever we think is good. But when it comes to work, we're still the serfs, aren't we? We're still the employees. We didn't get democracy in the workplace, and that is quite a stunning contradiction. It's very, very odd.
Yes, and that's been the thrust of my work and continues to be the thrust of my work. When I say socialism, I don't mean a big government. I'm not interested in big government any more than most other Americans are. That's not my goal. For me, the government is at best a mechanism, a tool, a way we get things done for society. But I much prefer having groups of people be self-reliant in a way that's democratic, but that allows real decision-making to be done by the people. And I've always found it this contradiction, as you rightly put it, that we want to vote for the person who sits in City Hall or the person who sits in the state legislature so that we have some control over them because we recognize how they have power over us. But then when we go to work, 9 to 5, 5 out of 7 days of the week, to an office or a store, and we allow a tiny group of people, the owner, the board of directors, or whoever it is, to make all the decisions. We have no power at all. They can literally tell us not to come back Monday morning when it's 4 o'clock on Friday, and we slink away. We have little or no control. We don't have any democracy whatsoever. We have kingdoms. We abolished the king in political society, but we reestablished the same king in the little business or the big business and around which we organize our lives. So for me, the socialism of the 21st century is going to be the movement, which I see growing all over the world, to change the way we organize the workplace. So it becomes literally democratic. If democracy is what we claim we believe in, and I take that very seriously, that it ought to be at the workplace in the society we're trying to create.
Very, very interesting. And you have written quite extensively on that topic and have spoken and even written another book on that topic. If people want to learn more about you and your work, Professor, how can they do so?
Very simple. The best way is to go to a website called Democracy at Work. That's all one word, democracyatwork.info. But you can also go to YouTube, again looking up Democracy at Work, and you can see the whole range of radio and television programs, books and articles, media interviews. There's more stuff on there to give you information than you probably will have the patience to go through, but we put it up there in the hope that you'll find it interesting and another way to look at the society we're trying to survive in.
Really appreciate your perspective, not afraid to touch the deified construct of capitalism, but actually to perhaps improve it, perhaps to even make it better for all people. It's a very, very interesting topic.
The goal. And let me also take a moment to thank you for having the courage, mindedness to deal with these questions and to invite folks like me so that other perspectives can get an airing and become part of the national conversation. That's the way to make a healthy society better.
It's our honor. Thank you, Professor, for being here. Again, if you want to reach out to Professor Wolff, go to democracyatwork.info or search his name on YouTube and find many videos of him speaking on these same topics. Thanks again, Professor. I appreciate your time today.
Thank you very much, and the best of the day to you.
All right, friends. Well, I hope you enjoyed today's broadcast and especially that interview with our good friend, Professor Richard Wolff, providing a very different kind of viewpoint as compared to the majority of economists that are out there. Don't ever mistake our having someone on like Professor Wolff as meaning that we are somehow promoting an idea promoted by one of our guests, but we do like to have different viewpoints on. We find it to be educational and helpful in a world that is so intellectually dishonest. And as always, I like to leave you with a final word. This time, with all this talk about inequality, maybe we ought to remember how we really are all equal. A quote by Christopher Rice reminds us of that when he said, "Every day is a bank account, and time is our currency. No one is rich, no one is poor. We've got 24 hours each." And that's just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
All of the information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of ftmdaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.